Paycheck Protection Program webinar. I am introducing our speakers and our sponsors. This webinar is a project of University of Minnesota Extension, MISA, the Minnesota Institute for Sustainable Agriculture, Farmers Legal Action Group, Minnesota Fruit and Vegetable Growers, Sustainable Farming Association, and many of these folks are actually presenting tonight. Another benefit of our presenters is that some have gone through the application process for PPP for their own farms or working with other farmers. Let's see, I think I'll just go ahead and start introducing if that's okay. Great. Oh, and excuse me, the North Central SARE Sustainable Ag and Research and Education is also a sponsor. And with that, we'll start. Lindsay Keene is with Farmers Legal Action Group, and she is a staff attorney. She has raised hogs and describes herself as a former pig farmer turned lawyer. We have Megan Roberts, and Megan is from south of Mankato. Megan and her husband farm, and Megan is also an extension educator and specializes in ag business management. And then Dan Zimmerly, my coworker, is an SFA community organizer, and he and his partner Laura own and operate Cedar Crate Farm. And then Jane Jewett with MISA is going to be the moderator for the evening. So Jane, do you have housekeeping things you would like folks to cover?
Sure, and I'm kind of more like the janitor than the moderator. I'm just in the background keeping things rolling along. So I don't believe that webinar participants have the option to unmute themselves, but if you do see a microphone, please keep it muted. And if you have questions, please use either the chat or the Q&A. Either one is fine. We've got Annie Claude from U of M Extension on with us who will be monitoring those and asking the questions on your behalf at the end. And I think we will hold questions until the end because the presentation is very comprehensive. And when we did it yesterday, it just seemed to work better to let the presenters march through it and then do a whole bunch of questions at the end. So please put your questions in the chat or Q&A as we go along. And without further ado, I will stop talking.
Okay, hello everyone. As Teresa said, my name is Lindsay Keene. I work at the Farmers Legal Action Group. And for those of you who may not be familiar with that, we are a small nonprofit law firm. We're located in St. Paul. And our mission is really just to help farmers stand their land. So kind of relevant to tonight's talk, you know, one of the ways that we try to do that is by producing a ton of materials that are all free and available online. And currently we have a few guides out to the different COVID-19 relief programs that affect farmers and that may or may not affect you. So I encourage you, if there's additional questions on either the Paycheck Protection Program, which we're talking about tonight, or a whole variety of others. We've dealt with CFAP, the unemployment insurance, and EIDL, among others. So anyways, just want to make sure everyone knows that we are a resource if you have questions, and to check out our website if you want to download any of those guides. So with that said, as you all are well aware, we're here to talk about the Paycheck Protection Program. I'm going to go ahead and give us an overview of that program, and then Megan's going to kind of walk through the nitty-gritty of how you actually apply, and then Dan will be able to give us some real-life experience of what that's like. So to begin with, I just wanted to put the Paycheck Protection Program in a little bit of context, since as we all know, the last 6 months have been difficult and surreal at times, and there have been so many different programs that have come out from the government to try and help people in various ways. So as you probably all recall, the Paycheck Protection Program came out at the end of March. It was one of 2 big programs in the CARES Act. So that was passed on March 27th. And the other one being the Economic Injury Disaster Loan Program, or EIDL. So those two programs, although they came out at the same time, I just want to emphasize that they're very different, and that the eligibility requirements are different, the aims of the programs are different, what you need to do to get funding is very different. And so the main thing I want to point out in terms of those differences is that the PPP is a program that was intended to help employers keep their employees. And as we're going to probably repeat many times tonight, you can be self-employed and still be eligible for PPP. But I want you to think about the fact that its aim is really helping people retain employees or helping people stay in business. So the Paycheck Protection Program doesn't itself have a high bar of showing that you have already experienced a lot of harm due to COVID-19. That is unlike the EIDL program, EIDL, which is more of a traditional loan program. And that program requires that you show substantial economic injury that was caused by COVID-19. So that is one of the main differences between the two. The other really important difference to keep in mind is that, you know, although a lot of people think of the PPP program as being a loan program, it is a potentially 100% forgivable loan program. That's not guaranteed, but as long as you follow the rules as they're laid out, you can get that loan forgiven in its entirety. So it's something to keep in mind as we go through this. So next up, I think we're going to talk a bit about some of the myths of this program. Again, so many things have come out. It can get pretty confusing following what are the requirements. I know early on there was a lot of confusion about whether farmers and agricultural producers even qualified for the program. So as you can see on the screen, and if you don't have the screen, I'll go through some of them. Some of the big myths that, as by definition, are not true are that, you know, if you don't have employees, if you're a seasonal employer, if your farm is small, you would not qualify. None of those things alone would disqualify you from PPP. Other confusion that we've seen, you know, again, folks who say, I don't want debt. We all know farmers tend to carry a lot of debt. And to that, I would just say, keep in mind that this is a forgivable loan. So it's something to not just discard right away, but instead to think through whether you're able to follow all those requirements and get it forgiven. Again, you know, we heard early on that there was confusion about whether farmers could apply. They absolutely can. We'll talk about the eligibility requirements. For some of you, it may not be possible, but for others, it absolutely will be. And then finally, and I'll go into this a little more in detail in a bit, that question again of, you know, wondering, well, have I suffered enough losses that are related to COVID-19? And again, the bar is lower on this because the goal wasn't to help people recover from existing losses, but more so to help prevent more employers from having to lay off workers. As you know, we've seen a lot of businesses were required to shut down and still are during this time. And finally, you know, there's the question of, you know, well, wait, aren't most people denied? And, you know, today I can't give you the statistics on the percentage of people who have been denied, but what I just want to reiterate is that we know farmers have applied, we know they have received loans, so that in and of itself shouldn't dissuade you.
Thanks, Lindsay, for going through those myths. My name is Megan Roberts, and I work for Extension Ag Business Management Team. Since the beginning of COVID, a lot of my work has been focused on some of these farm financial programs that are available to farmers. And so since I've been looking at this since the very early days of PPP, I know that there are challenges, and I know that farmers have faced some of the challenges of the very quick rollout of PPP. When we think about most legislation, it takes a really long time to come up with that idea, have it go through committee, get onto the floor of Congress, get passed, go through the president, and then actually be implemented. When we think about PPP, that time was shrunk into a very small window. And when that happens, there's bound to be some challenges. So just the sheer speed in which this program was rolled out, there were some hiccups. We didn't know exactly how things were going to work. Another challenge is that while this is a program of the Small Business Administration, it is administered by local lenders. And not every lender is going to do things exactly the same way. That means that it's difficult for organizations like the University of Minnesota Extension or FLAG to give a total picture of how to apply for PPP, because there might be slight nuances that are different from lender to lender, and they had that ability to do it. Also, some local lenders did not feel in the beginning, and even some still today, that this was really a program for farmers, and that was certainly a challenge. So that hits on the third bullet point, that misconception that farms do not qualify. And a lot of that is rooted in the fact that there are many small business administration programs that farms have historically not qualified for. Those are 7B programs. There are some programs in the Small Business Administration that farms do qualify for, 7A. And this program was always from its inception written to include farmers, although it was written for the whole breadth of small businesses. But farmers were definitely in the mix from the beginning of PPP. But there was some misconception there, and certainly some differences from lender to lender and how they interpreted this. There was also some lack of clarity. On here I list payroll expenses, which payroll expenses counted, but there's actually a lot of lack of clarity on many nuances of PPP. We're all the way into July now, and a lot of these things have been clarified. So it is a bit smoother of a process. Another challenge is that this program has been wildly popular, very popular in its first iteration in April, and it ran out of money in a matter of weeks. We're not seeing that challenge anymore. In fact, when it was refunded in April, there has slightly been a challenge of trying to work through the dollars. We still have over $100 billion of PPP funds remaining. So that is no longer a challenge. There's certainly lots of PPP funds available for qualified applicants.
Okay, so right now we're going to get into what do you need to do in order to be eligible for this program? And I think I may have neglected to say it before, but when the program was extended, you can now apply up until August 8th. So just want to make sure that's clear. So the first thing is that in order to qualify for the program, you have to be what's considered an eligible business. And this can come in a variety of forms. In general, the program was written for what SBA felt were smaller businesses. And by their definition, those would be businesses with 500 or fewer employees. These could include nonprofits, veterans organizations, tribal organizations. And also, as we'll probably keep repeating, agricultural producers, farmers, ranchers are all eligible as well. But again, you would still need to fit into the category of having 500 or fewer employees. And then finally, and this one's a little more counterintuitive, but you can be self-employed, you can have a sole proprietorship, or you can be an independent contractor, and you are also able to apply for and receive a PPP loan. So that's the eligible business. The other kind of key rule is that you needed to have been in business as of February 15th of this year. The one exception to that is, for example, if you were a farm that was not fully ramped up in February, and SBA will allow you to apply if there was any 8-week period that you were in full operation between May 1 of last year and September 15th of last year. So either of those two rules will provide you with eligibility. And the final thing, and this we've heard some confusion about, or at least people just feeling a little hesitant about, is the fact that, when you do apply for the program, you do have to make certain certifications. And one of them says that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And again, I just want to kind of distinguish that requirement of essentially saying, these are uncertain times, and I need some help to make sure that I'm going to be able to keep going, with a requirement that exists for a program such as EIDL, which says you have actually experienced substantial economic harm. So the bar of existing harm, I guess we could say, for PPP is much lower. So you do need to certify that if you apply. But again, I think by far the majority of folks right now are experiencing a lot of uncertainty going forward. So those are sort of the big eligibility requirements. Some of the other rules to keep in mind, people often want to know, well, is it going to be worth my time? So how much can I get? And the way that this program is designed, it determines your loan amount by looking at your 2019 payroll costs. And essentially the loan is calculated by 2.5 months worth of your payroll costs. And I would say, and you can see it on the screen as well, that if you are a newer business, that you can determine your payroll costs by using your payroll from between January 1st of this year and February 29th of this year. Now that rule only applies if you're a new business and you have employees, and this is a pretty important distinction. If you are a self-employed person or a self-employed farmer, unfortunately, the way the program is designed, you have to have had a 2019 Schedule C or Schedule F. And we'll get into that a little more in detail, and Megan will as well. So for those newer businesses, again, if you have employees, they allow you to calculate your loan amount from those first 2 months of this year. And if you are self-employed and a new business, unfortunately, you will not be eligible for the program. So the next kind of set of rules relates to, okay, let's say you're eligible, you get a loan. Many people want it to be forgiven. And in order for the loan to be forgiven, there are certain uses that SBA allows. And those uses include payroll costs. And payroll costs it's a broader term than it may sound. So we have things that are more obvious, like your salaries, wages, and tips. But then there's also a wide variety of employee benefits that count as payroll costs. So your vacation, family leave, parental leave, medical, sick leave, as well as retirement. And in addition, your state and local taxes that you pay on employee compensation. So those all fall within this broader category of payroll costs. And then the second main use for a PPP loan are for your expenses related to your business rent, business utilities, or your business mortgage interest payments. And the rules do say that you would need to be able to deduct these on your Schedule C or Schedule F as business expenses. And so again, there's a little quirk for self-employed folks. In order to have a use be considered an eligible use of the funds, if you're self-employed, you had to have been able to deduct it last year. So again, if you're sensing a theme, it's that if you are self-employed, SBA is really going to rely on your 2019 Schedule F or Schedule C. So right now we're going to go through kind of specifically how the loan would be calculated, whether you are self-employed, whether you have employees, or whether you're a seasonal employer. So first, let's go ahead and talk about a self-employed person or an independent contractor, a sole proprietor. So chances are I guess I should say you can be eligible for PPP. The big caveat with this category of borrowers is that in order to be eligible, you need to have a positive net farm income from your 2019 Schedule F. And that, as Megan will talk about later, specifically comes from line 34. So regardless of whether you want to try to take out depreciation or things like that, they're pretty strict that they're looking at that one line. And if it's below 0, you're not going to be eligible for the program. So we know that there are a lot of farmers who don't show a positive net farm income, and so that is a barrier for some. But if you do have a positive net farm income on your Schedule F, I would encourage you to keep the program in mind. The other requirements for self-employed individuals wanting to apply. So in addition to having filed your 2019 Schedule F and having a positive net farm income, you also need to be in operation as of February 15th of this year. You need some version of that self-employment income. And then you have to have your principal place of residence in the United States. And those are really the 4 main requirements. And at that point, the way that SBA is going to calculate your loan is they're going to take that net profit from 2019 and they're going to divide it by 12 to get your sort of average monthly net profit. And they multiply that by 2.5. And that's essentially what your loan amount would be for a self-employed person. So next, what if you're a farm and you actually, you do employ people? So what are the requirements for you? So again, in order to be eligible, SBA will be looking at various tax forms like your Schedule F and Form 943. Megan will go into this in a little more detail. But one important thing to keep in mind is that if you're applying for PPP and you have employees, it does not matter whether your net farm income on your Schedule F is positive or not. And the reason for that is essentially if let's say you had a negative net farm income on your Schedule F, but you do have employees, SBA simply wouldn't take into account any quote unquote payroll that you might have for yourself. So you could still get a loan, but it would not take you into account as it would if you did have a positive net farm income. So that's just one distinction to keep in mind. And again, the maximum loan amount that you would receive would be the average monthly payroll for your employees. And the way the rules are written, it's only employees who have their principal place of residence in the United States. But they'll take that average monthly payroll, multiply it by 2.5, and then you have your maximum PPP loan amount. So finally, it's seasonal employers. So if you're a seasonal employer and you declared your payroll, again, our favorite form, the Schedule F, as well as 943, those will all be used. But one of the big differences for seasonal employers is that when SBA looks to calculate what your loan will be, in terms of determining, what's the average monthly payroll, you're gonna have two options. You can either elect to use the average payroll that you spent between February 15th and June 30th of last year, or you can choose any 12-week period between May 1st of last year and September 15th of last year. So as the borrower, the applicant, you get to choose on that. And then in order to calculate the loan amount, whichever time frame you use, they will take the average monthly payroll for that, multiply it by 2.5. You're probably sensing the theme here, and then you get your loan amount. So now I think Megan is going to talk in a little bit more detail of what it's actually like to apply.
Yep, absolutely. And there is going to be that repetition of the theme. What do you need to do to fill out an application? Well, those two forms, the Schedule F and the Form 943, are your two primary sources of information. If you are self-employed, you are really, without employees that is, you are really looking at your 2019 Schedule F. That's going to have almost all the information you need in order to complete a PPP application with your lender. If you have employees, you're going to need also your Form 943, which is the agricultural declaration of payroll, and that you also submit to IRS. Now, there are some additional forms that you might want. For example, if you do any pre-tax benefit contributions to your employees, for example, pre-tax health insurance plans, things like that, you would want to gather that information because, as Lindsay mentioned, payroll is broader than just the hourly wage or the salary that you pay. You can also include benefits in that calculation. And so there might be additional forms and records that you would want to gather before you fill out your application. Just to give an example of why you might want to go deeper into your records in order to gather information versus less deep, I'm going to kind of compare and contrast a situation within my family. I've applied for PPP along with my husband and my husband's family. We have a very small farrow to finish hog operation. We employ several people year round, but it's not a large number of people. We have 2 full-time non-family farm employees. And so for us, back in April, when the money was running out very quickly, we really looked at it as how can we get our application in as quickly as possible. We're not concerned about maximizing every cent. We just want to utilize our time well, get this application in, and then move on with our daily work, me in Extension and my husband working on the hog farm. So we just took our 943 divided by 12, multiplied by 2.5, put a bow on our application and sent it in and didn't think really twice about it. Now, in contrast, my brother and sister-in-law run a dairy. They have several more employees than us, and they do pre-tax benefits contributions. And so it was really important, and it actually made a really good use of their time to go into the details and determine, back in the early days when we didn't know exactly what payroll and what taxes counted and what benefits were and were not allowed, it really made a lot of sense for them to get into the nitty-gritty and to make sure that they were maximizing their application. So just kind of a compare and contrast. You can determine how deep you want to get into your PPP application. It's a busy time right now in summer. If you want to keep it pretty high level, take your Schedule S, net farm income, just divide by 12, multiply by 2.5, and not go any deeper. That might make more sense for you. For others, you want to go a little bit deeper. SBA has this really helpful guide. I'm going to make sure that this link is available, and it details some of the ways that you can go into your Form 943, your pre-tax benefit contributions, and how that varies depending on whether you are a sole proprietor, an LLC, an S Corp, or a C Corp. So there are some differences there as well if you are organized as a business structure. Just a quick example here, want to show the Schedule S since we've been talking about it so much, and just highlight what are some important lines. Really, when we are looking at a sole proprietor, you can skip everything. You're going to put in, obviously, your personal information, like your social security number in your application, but then it's just line 34. As we get into an application that includes employees, then you might be looking a little bit deeper into benefit programs, if you have any pension or profit sharing, if you have any of those additional items that do count as employee compensation that makes up the broader category of payroll. But other than that, it isn't a lot of data that you're needing to collect in order to apply for PPP, just really a few pieces from your 2019 tax forms. Really quick example here, just to kind of hit home the math that we are doing. If we have someone who is self-employed, no employees, last year they made $42,000 in net farm income. That's what it shows on their line 34. You just divide by 12, multiply by 2.5, and our PPP request would be $87.50. So what are some tips for successfully applying? As Lindsay and I have really reiterated multiple times so far, gather that tax documentation that you need for your application. Do that ahead of time. Pull out your Schedule S. If applicable, pull out your 943. Have that information available. On the SBA website, they do have an example PPP application, and you can fill all of that out ahead of time. Just be aware that this is administered by local lenders, not SBA. So you're not submitting that form anywhere on the SBA website. You are submitting that to a local lender, which could be a bank, a credit union, the Farm Credit Service. So there are a variety of lenders that are administering PPP, and they might use their own form. Some have online forms, some have paper copies, some take the SBA application directly. Regardless, if you've already filled out the SBA application, you're going to have all that data right there in order to fill out whatever form that the lender is requesting generally. Another thing to think about as you are applying, you might need to advocate for your eligibility. Hopefully, at this point in the program, most lenders realize farmers are eligible, they know some of the quirks of the program, and so you're going to have a smoother time. But you might not, and you might need to advocate for your eligibility. You might need to be persistent. Some lenders might be more interested in working with existing clients as well. So if you are forming a new relationship with a bank, credit union, other lender in order to initiate your PPP application, you might need to be a little bit more persistent than you would think. So that's just a recommendation, is to be persistent. And as we look at the calendar, you're going to have to be persistent now because we really only have 2 weeks left. You don't want to wait until the week of August 8th. So August 8th is the deadline for banks to have things submitted to SBA. So you can't wait until 11:59 p.m. on August 8th and hope that you can get things into the lender and they can get it into SBA. It just doesn't work that way. There isn't enough time. So you're going to want to start working on this very, very soon if you do decide PPP is the program that is right for you. A few potential issues with lenders, and I really kind of hit on some of these in that last slide. There is that misconception that ag is not eligible. As we've moved through the months of April, May, June, and July, that misconception has definitely lessened. We may find some lenders that are more interested in working with existing clients. In fact, many lenders have reached out to their clients. If they have any small businesses on their clientele, they've reached out to them. And so there is that potential concern. If you're making a new relationship, you might need to be more persistent. It might be a little bit more challenging, but there are definitely lenders that are willing and looking to help people access this governmental program. Another concern is that there might not be accessible applications for everyone. When we look at the SBA website, and again, they're not directly administering it, so we have to work with our lenders, but National SBA doesn't even have translations of the PPP application in all of the relevant languages. They have a lot. They have tried to be really accessible, but they haven't been able to meet every potential business owner's needs. So that's SBA, the federal agency. We also have lenders that might not be as accessible to everyone. Just want to end on a positive note on this slide, though. There are many lenders looking to help on the PPP process. So if at first you hit a stumble, try again. And I think that there will be someone out there that is willing to help you through this process. Lenders who have agreed to offer PPP loans are available on the SBA website. That is sba.gov, and you can see the link here. If you Google sba.gov and participating lenders, you can get to this PDF. It is a very, very long list because there are lots of lenders looking to help with this program. In Minnesota, I believe it's about 10 pages of this document that is just a list of lenders in Minnesota. So that might be a little bit overwhelming because there are so many lenders in Minnesota that are participating. So if you're still pondering, one way to gather more information is to ask your fellow farmers. If you have friends that are small business owners, friends that are farmers that you know have participated in the program, that's a really good way to get an idea of who you might work with, is to have a recommendation from someone that you trust. So if they had a positive experience, you might be more likely to have a positive experience as well if you go with that lender.
Okay, so now we're gonna assume you've figured you're eligible, you've gone through the application process, and then the question becomes, I think for many, how do we ensure that we can actually get this loan forgiven to the maximum extent possible? So right now I'm going to talk a little bit about some of the key requirements for the loan forgiveness. And I want to say at the outset, although I think in general the rollout of the PPP and a lot of the government programs has been pretty chaotic and confusing, just multiple acts, money coming out at different times, things like that. But I do think the requirements around the loan forgiveness have been some of the most confusing, and that's because they have changed frequently. And some of them, the biggest changes occurred on June 5th, and that's when the Paycheck Protection Program Flexibility Act was passed. And so that date becomes important for some of these rules. I may not get into too much of the nitty-gritty, but I would say, if you do end up getting a loan and you find yourself having questions on forgiveness, please feel free to reach out to Megan or I, or again, on FLAG's website, we're going to have some detailed information about these forgiveness rules. So just know there are resources if it ever gets a little confusing. So to begin with, again, want to reiterate that you can get 100% of the loan, both the principal and any interest you may pay, that can be forgiven. So to do that, here are the main things that you need to keep in mind. Under the rules, you need to spend at least 60% of those loan proceeds on that kind of broad category of payroll costs. But the other caveat, if you are self-employed, if you're an independent contractor, a sole proprietor, SBA will use what it calls owner compensation replacement. And What that entails is, again, looking at that line 34 from Schedule F. And what SBA is going to do is it's going to calculate sort of an 8-week proportionate share, of that line 34. And that's how they are going to determine, you know, how much you need to spend during what they call the covered period. And, you know, that's actually what I might mention now, is that that was a big change in the rules. When this program first came out, they required that eligible borrowers and people who received loans, that they had to fulfill all of these required uses within 8 weeks of when they received the money. So there was an 8-week covered period. With the Flexibility Act on June 5th, that was extended to 24 weeks. So essentially now you have 24 weeks in which to spend 2.5 months worth of payroll costs, if that makes sense. So again, that was the first requirement, right? We need 60% on payroll costs. Then the other 40% can be used for things like your business utility payments, business rent payments, or your mortgage interest. And one thing I do want to point out is, you know, let's say, for example, that even in that 24-week period, you weren't able to spend 60% on your payroll. Let's say you could only spend 50%. That doesn't mean you do not get any loan forgiveness. All it means is that your loan forgiveness is going to be reduced accordingly. So if, you know, if you're down to 50% or if you're down to 25, you know, the reduction in the forgiveness amount would keep decreasing. But you are still eligible to receive forgiveness even if you don't meet these requirements to a T. So that's something I think that's important to keep in mind. The other 2 requirements on receiving loan forgiveness can be especially confusing because there's so many exceptions that have been developed. So the general rules are that during this covered period, so that 24-week period, you need to keep your wages within 75% of what they were during January, February, and March of this year. So that's the first quarter of 2020. So that is the period that SBA is going to compare how much you were spending on wages for those 3 months versus during your covered period. And then the last one is what SBA calls full-time equivalent employees. And your number of FTE employees needs to remain the same. And what the full-time equivalent is essentially saying is if you have 2 part-time workers, that is the equivalent of 1 full-time worker. So if you, let's say you had to let go 2 part-time workers, but you were able to rehire 1 back full-time, that would essentially be the same. So SBA would consider that as you were keeping the same number of FTE employees. And again, you know, there are various exceptions for these rules. So if someone is laid off and you offer to rehire them and they do not wish to be rehired and you can't find someone to replace them, you know, SBA, you know, you're not gonna run afoul of these rules. And so there's a variety of other exceptions that if you have questions on those, please feel free to reach out. And then I want to just state that, you know, if there are portions of this money that you're not able to spend on these uses, what that means is that your PPP turns into more of a traditional loan and it will have a 1% interest rate over 5 years. When this program was first rolled out, that the duration of the loan was capped at 2 years. Congress changed that with the Flexibility Act. So now there's a 5-year span within which that you need to repay the loan. So those are the key requirements on forgiveness. And the last thing that I want to just briefly mention is, you know, what happens if you're denied? Is there a way to appeal? And the short answer is yes, though I wish I could give you more details on this. Essentially, what SBA has said is that there will be an appeals process, both if you were denied the loan in the first place, or if you were denied the forgiveness that you feel you were owed. The problem is that when SBA released this rule, it simply said, we will issue another rule that gives the process for how to appeal. And to date, they have not released that rule. So we know there is going to be an appeals process, but right now, we don't know what that appeals process will look like. So to this point, what I want to emphasize is that, you know, the reality is this is a government program. It's run through the Small Business Administration, which does not historically work with farmers. And it's not you know, it wouldn't be uncommon for the government to make mistakes. And so there is a chance that some folks will want to or will need to appeal. And this is an important right that you have and that they have said you have. So at this point, my best advice would be, if something goes wrong, you think SBA didn't follow its own rules, you feel like you should have received more or you should have had more of your loan forgiven, just to keep as many records as you can of both your application and any contacts you've had with your lender, SBA, so that when those appeals rules are released, you'll be in a better position to know what to do going forward. And at FLAG, we're going to try to keep up to date on that and be posting things on our website whenever those rules are published. So I think, you know, that's our overview of the program for now, and I'm going to turn it over to Dan so he can tell you all about his experience.
All right. Hello, everyone. So my name's Dan Zimmerly. I run a small produce farm called Cedar Crate Farm. We're about 20 miles southeast of Mankato. And we have 2 seasonal employees. And when I heard about the payroll protection program, I decided we should apply because I was considering cutting one of the positions due to the uncertainty that COVID presented. And I thought, well, if I got the payroll protection loan, then I would keep that second position on our farm. So I'm just going to tell you kind of how my process went. And overall, I would say it went pretty well. I work with basically 2 banks, a credit union and a bank. And both of them reached out to me via email and encouraged me to apply for the loan. This was like in mid-April or so. And so I did. And I went through and I looked back at my payroll expenses from last year. And at the time, I wasn't sure what form to use. So I just used the payroll software that I used to generate a report of what I paid in payroll over the whatever week period it was. And then I also looked at my taxes to figure out what our profit was on our farm last year. And then I added those 2 numbers together, put that in my loan application. The bank asked me for a copy of my taxes from 2019, which I submitted to them. And a few days later, I had the money in my account. So overall, I guess for me, it was a really easy experience. It was a good experience. And for a government program, it seemed to work well. There's, you know, of course, the question of forgiveness at this point, which is a pretty big question mark. Our bank has sent out emails to us just saying, don't send us any paperwork yet. We're still working on figuring out exactly what SBA is going to want for documentation for forgiveness of these loans, and what qualifies and how you prove it and those kinds of things. So I guess I haven't really worried about it, but I'm kind of eagerly awaiting that stuff to come out because I would like to get the loan forgiven because we did use it all on payroll. So it was helpful for us in our business and it worked pretty well for us. I would add that at the time, I had heard that folks were having better luck applying with smaller institutions that you maybe have a closer relationship. So maybe like, you know, your small town bank or credit union versus the big Wells Fargo or US Bank. People with the smaller credit unions and things had better luck. I have no idea if that's the case anymore. I think the initial thing was there were so many applications that the bigger banks couldn't handle it. I know the small banks had troubles too, but so that's kind of what my experience was. I would encourage you to apply if you meet the requirements. You have employees, definitely apply. And if you posted positive net farm income last year, definitely apply. I can take any questions at the end, and that's pretty much all I have to say about my experience.
Okay, thank you to our presenters. And we do have a few questions in the chat, so Annie is going to start reading those off and the presenters can answer your questions.
Okay, the first question is, we are organized as an LLC and did not have employees last year, but had a profit. Do we qualify?
Yes, so when you're thinking about PPP, you are either applying as yourself if you are a sole proprietor or self-employed, or if you are organized as a business structure, you are applying as that business structure. So the LLC can apply for PPP, and then it would be distributed to you as the owner. So we've been talking about sole proprietorships, but you can also be organized as an LLC and self-employ yourself within that LLC, and then it's that LLC that is applying.
All right, thanks, Megan. Second question, if we're applying as self-employed, how do we prove we use the money the right way so that we get the loan forgiven?
Lindsay addressed this a little bit in that owner's compensation, but this has definitely been a very common, very popular question that myself and my colleagues in Extension on the Ag Business Management team have gotten, because we work with a lot of sole proprietors that are self-employed and they're not writing themselves a check. You don't write, not very often at least, you don't write yourself a check for your net profits. You're going to use that owner's compensation equation on the forgiveness form as it's written now. They might change the forgiveness rules probably to make them easier, but as it's written now, you do have to apply for forgiveness, and SBA details how you would calculate your owner's compensation. Lindsay, do you have anything to add on that aspect of it?
I think the only thing I would say on that is that, again, because it's a little harder, especially if you're not writing yourself a check as a self-employed person. SBA is really concerned with, how do we ensure that you are self-employed? And so, as Megan just said, they're going to look at that net farm income, but what they're going to specifically do is say, okay, we're only going to allow you forgiveness for up to, either essentially an 8-week proportionate share of whatever your 2019 net profits were, or if you are in the 24-week covered period. So if you applied for a loan or are applying for a loan after June 5th, they'll do 2.5 times that amount. And so it's less about necessarily proving that you spent it on that, but they're just going to assume, okay, if this is what your more or less your payroll for yourself was in 2019, we're going to give you, a maximum amount that equals to around 2 months worth of that. So if that, hopefully that makes sense.
Yeah,
Okay.
I was just going to add, when you were talking about the 8 weeks, it actually, and you continued on and added that clarification. It got a little bit more flexible with that June 5th law. So they broadened it out just slightly so that if you are one of the later applicants, you have a little bit more flexibility, but they're not going to let you go over your loan amount, and that's where you're capped, and you've used your 2019 taxes as the basis for that calculation.
All right, thanks. Third question, we had independent contractors. Can we count the money we paid them?
Great question, but sadly, no. And the reason is because those independent contractors can apply themselves as self-employed individuals. So if you have issued a 1099 to someone, they are not an employee of yours. They are an independent contractor. Only your employees, which you'd be issuing a W-2 to, would qualify as your payroll.
Thanks, Megan. Okay, fourth question. Can you spend entire PPP on payroll only for loan forgiveness?
Yes, I think the key is that 60% threshold of spending that much on payroll is a minimum. So you just need to spend at least that much on your payroll. It's not a maximum. And I think Dan even mentioned in their case, they found that they spent all of it on payroll. And, you know, the one other thing I want to add here that I neglected to say when we were talking about the loan forgiveness rules is simply that, you know, the requirements around, if you do have employees, around keeping the same number of full-time equivalent employees, there is what SBA calls a safe harbor rule that essentially says, you know, if you did have to lay some people off, or if some people, you know, resigned, but you're able to reverse that by December 31st of this year, they will count that as, you know, you have retained your full FTE employee equivalent numbers. So just keep that in mind, that, you know, even if you went through a hard time and you did lose some employees, you still have some time to hire them back and still receive all that you can be eligible for the forgiveness.
Another question, does this grant take into consideration the spouse's off-farm income?
If you have off-farm income that is, you know, unrelated, well, obviously, if it's off-farm income, it's unrelated to your farm business, and therefore that is not a part of the PPP program. So if that is from a separate small business, that could be a separate application, but generally any sort of off-farm income, spouse's income is not going to be included because it wouldn't be on your line 34 of your Schedule F, and it wouldn't be included as your 943 payroll. And those are what we're looking at for this particular program.
The next question, I hope I'm saying this question right. Wife's payroll is PIC grain sales. Can this be used as payroll?
I have phoned a friend out on this question, but it's working through my my text message right now. As I understand this question, this is likely not going to be something that you're going to be able to include on your PPP application. We're really looking at that cash compensation of payroll and or any of the eligible benefits that you give to employees. So, but we'll see if we get any additional information via text message on this, and I will share it when and if it comes through.
All right, thanks, Megan. The last question that we currently have in the chat, again, we still have a few minutes, so if you have more questions, type them in. But the last one there right now, oh wait, we just got another one as I said that. Okay, so 2 more questions. If we apply as self-employed, do we need to turn the same amount of profit in 2021 as we did in 2020 to get paid back?
So the loan forgiveness is really more about your expenses than it is about your profit. So again, really the main requirements for receiving that forgiveness once you have received a loan is that you keep your payroll expenses, you know, at least 60% of the amount of the loan you spend on that, 40% on those rent, mortgage interest, or utilities. And so to my knowledge, and Megan, correct me if I'm missing something, but the profit would not come into play.
And remember that payroll includes, if you are self-employed and don't have employees, your owner's compensation formula, and that is only based on 2019 tax information. So 2020 profit and 2021 profit would not be relevant to that calculation.
Next one is, how do I show payment going for employees if we just started paying in January and we pay family that doesn't have to be claimed?
If you are not paying compensation that is IRS recorded, it is not going to be something that you can include on PPP. So if you have family that are employed, quote unquote, by you, but they're not receiving payroll compensation, unfortunately, the way this program is written, they would not be able to receive PPP via the current rules as they stand. Now, the January aspect, if, again, they're not being paid, irrelevant. But if you have employees that just started in January, or if you have one of those new businesses, remember there are some specific date ranges that you can utilize. And I'll let Lindsay take that aspect of it since it was part of the eligibility determination.
Yeah, so that is a rule that simply allows new businesses with employees to determine both their loan amount by looking at that January 1st to February 29th timeframe. So as long as you were in business on February 15th of this year, SBA will look at those first 2 months to determine your average payroll. But again, if you are self-employed, it is a requirement that you had your 2019 Schedule F. So if you're a new business and you're a sole proprietorship, unfortunately, you would be ineligible for PPP simply because they really believe that the only way to show kind of verifiable income is by looking at that 2019 Schedule F.
This is a little bit of a left-hand turn from this question, but it relates back to my phone a friend, and I have additional information. If, let's say, you're paying your family in commodity wages, which is an official form of compensation, unfortunately, it's one of those things with SBA that we're waiting for that very specific guidance to come out. So that was what I received via text. So thank you to my colleague, Rob Holcomb, for getting me that answer. So more guidance. It's one of those things that we have to wait and see. Clearly, since I didn't know the answer.
All right, this one's interesting. I'm getting calls from a third-party vendor saying that they can get me the money quicker. Is this a scam?
Yeah, so this was a question that we also received in an earlier webinar, and I would just exercise caution when it comes to this. You can go to sba.gov and see the list of lenders that are actually participating in the program. That's a good first gut check there. This is a governmental program. It does take a little bit of time. Lenders have to submit their information. It comes back. Your money is issued. It works faster than many governmental programs, but if you're getting word that you can get your money within 24 hours and they'll just take a small fee in order to do that for you, that's a lot of red flags. So it's probably a scam, but you can do a little bit more research and check it out.
And the only thing I'm just going to quickly add to that is that just to be aware that the rules for this program do allow third-party vendors or agents to help with the applications, but I think the best way, or one of the good ways to determine whether it's a scam or it's a legitimate vendor, is if anyone asks you for money or says there's a fee, that is an absolute red flag, because under the rules, no third party and the bank can't require a fee from you. So if anyone is asking you for money to fill out the application to get it quicker, as Megan said, that in my mind would be, I would absolutely pause there and check into them more.
Okay, thanks. The last question I have up here is, we're trying to decide what would be a better route between the PPP and the EDIL. We have experienced increased demand for our fresh produce and starter plants, but we also had to cancel an entire series of events that was income generating.
So that's an interesting question. Again, as I briefly alluded to at the beginning, these are two very different programs for a number of reasons. Obviously, the PPP as being a kind of quote unquote loan program, but a forgivable loan program, that is really attractive to many people, right? Because if you get money and you can spend it on payroll or there's other expenses, then it's completely forgiven. EIDL, however, if you have experienced economic harm from COVID-19, and it sounds like in this example, having to cancel entire events, you would qualify for that requirement. It allows you to get money that you need to keep going. It is a loan that has a 3.75% interest rate. If you're a nonprofit, that goes down to 2.75%. And there's a 30-year period in which to repay it. So I think the question is just both, what are you needing the money for? If it is for things like payroll or other kind of business expenses, then I would definitely say the PPP is something to look into. But if you're self-employed and you didn't have positive net farm income and you don't qualify for PPP, EIDL is an option. And the last thing I will say on the EIDL program is that it is both a loan, and then there's also what they call these emergency advances. And many of you have probably heard of those, where the government was paying what amounted to $1,000 grants per employee. And so, I would have said a month ago, I think it's worth people applying for the loan, because regardless of whether you get it or accept it, you can probably qualify for the grant. However, earlier this month, the program has run out of I think it was $20 billion they had set aside for those emergency advances. So technically, EIDL goes until December 31st of this year. There is a chance that Congress will put more money into that sort of grant aspect of the program. But as it stands now, what you can apply for with EIDL is simply the traditional loan. So that was, I guess, kind of a long answer, but.
And I'll make it longer by adding the fact that you can do both. If you have this economic uncertainty, you're interested in either owner compensation recoupment or payroll recoupment through PPP, you can do that, and you can do EIDL. If you did EIDL earlier and you got one of those emergency advances, the only thing that happened then is the forgiveness of PPP intermixed with that EIDL advance. You couldn't double dip on the grant portion, but the loan operates completely the same whether you get PPP or not. The EIDL loan terms don't change based on whether you've utilized both programs. It's just asking yourself, do I have a need for PPP? And did I have this economic harm that is requiring me to want to apply for an EIDL loan?
All right, the next one is, I tried to get money from PPP early on and my banker was not supportive. I can ask them again, but it would be good to know exactly what to say. So I guess the question is there some guidance on good things you can say to your banker if you've already tried applying before? Or already tried approaching them before?
Yeah, this one is a hard one. It goes back to that persistence. I've certainly heard this from farmers, particularly back in April when some banks and lenders were just completely convinced that it was not for farmers. We definitely know that is not the case. So that's kind of step one. Is it specific to your business, or is it specific to the fact that you're in agriculture that they're not supportive? And then that would change how you would strategize trying to follow up. The other suggestion to think about is seeking out a different lender to work with you on PPP. But try back again, try to be persistent, but there are certainly banks and other lending institutions that are taking on new clients for PPP.
And I would just add to that, I think if you're in a situation and the bank is giving you some pushback, if you can get them to be as specific as possible about why they think you don't qualify. And the reason I say that is, it depends how much it's worth it to you, but I would say that you are welcome to reach out to us. And the other thing is, the guides that FLAG has put out are, for most people, this is not enticing, but they are heavily footnoted with the citations to the laws and the rules for every requirement in the program. So if you can get a really specific response, we can absolutely help you find out, yes, they're correct, you don't apply, or you aren't eligible, or no, you are eligible, and you can go in with the rule that says you are. So again, that takes more effort, but it's absolutely a possibility. So feel free to utilize us if you need to.
And then, can I apply for PPP without taking too much time away from work to do the paperwork? Is it simple?
It depends on how you define simple. I think that a lot of individuals that have had success with PPP would say that it was a relatively simple process, especially in the grand scheme of governmental programs and loan applications. It's relatively simple. If you do have that tax materials at your fingertips, it's going to be relatively simple, but everything is relative. It depends on how you define that term. I would argue it's relatively simple, and I think Dan has turned on his video and is going to argue the same thing.
Yeah, I would say it's very simple. I think it took me maybe 1 or 2 hours to go through it, and that was at a time when there was a lot less resources on how to actually fill out the application. So it's easy. And the other thing that I would ask yourself, if you're busy with other work, is if you're busy with your other work, can you add more value or create more value in 2 hours or 3 hours or 4 hours at your business than the value of the PPP application you'd be submitting? And if the value of the PPP application is higher, you should definitely fill that out. So that's how I would figure it out. So that's my 2 cents on it. It's easy. You should do it.
That's really good.
Boring economists like myself would tell you to put it into an opportunity cost equation, and what has more value, that hour that gets you a couple $1,000 or hopefully even more, or yes, you know, needed urgent work, weeding, getting your produce ready, but maybe not as high of a value in terms of the specific number of hours that you need to get it done. But economists, not everyone likes that sort of equation. That's the sort of thing that gets us all riled up and excited, but maybe not you.
All right.
That's an economist joke too, everyone. That's about as great, that's as funny as we get, so.
All right. The last one that I have here, it might have already been covered, but maybe you have more to add or review. What information will be required from the business before, during, and after accepting a PPP offer?
So I don't know if Megan, you, in terms of was this more about the documentation or just generally what's required? No, Annie?
That was all I had for the question.
That was the question, I think.
Okay. So again, I think as Megan talked about, you know, you'll want your tax forms or so either your Schedule F or your 943 before you go through the process. And then afterwards, my recommendation is to keep records as you can. And this especially becomes important, you know, if you are a business that has employees and you have had to lay people off or reduce wages or things like that. Again, there are those few exceptions that allow you to hire people back, or, you know, there's all these things like that, but they will require that you show documentation that you offered to rehire someone or that they rejected that offer. So, you know, when in doubt, just keep your records. But I think right now it seems pretty minimal what you actually have to do, both in terms of documentation and the documents you need to apply.
Just your normal farm financial records is going to be enough in most cases. As Lindsay was talking about, when it gets into some of those safe harbor rules on employment, full-time employment equivalencies, making sure that you have that, not just like a record of it, but those specific things in writing, that could be very helpful. So you want to make sure your records are not just stored in your memory, that you have things in writing with dates and signatures if you're getting into any of that, letting employees go, rehiring, that sort of thing. But that's good for, you know, any sort of employment issue, not just PPP. Having things in writing is always good.
Okay. I think this actually might be the last one. We did not employ anyone on our farm, so do not have that outlined as an expense on our taxes. We showed a minimal profit for 2019 taxes after depreciation. Do we qualify, and to what extent? Are we able to figure back in depreciation in order to qualify for funding? Otherwise, it is minimal.
That's a really great question. When we think about our net farm income, That is our profit after all of our expenses, including depreciation. And so even though depreciation isn't that tangible expense that you can see going out of your business, it is an expense to the IRS, and it is deducted before you get to net farm profit on line 34. So no, you cannot add it back in to get your net farm profit. Your net farm profit is what it is with your depreciation expense. Now, there are processes to amend tax forms. At this point for PPP, that is probably not something that would be recommended, because that creates tax consequences for 2019. It costs money to do. It's just generally not going to be worth it for the program like PPP. That being said, I don't give recommendations on what people do with their taxes or how they treat their finances. So that just sort of outlines how the program works. Yes, depreciation is counted as expense. Yes, you do qualify if you have any net farm profit. If it is a small net farm profit, your PPP amount is going to be lower.
And I think I would just add for that, you know, it's one of the simplest calculations is for the self-employed. So if you took that line 34, divide that by 12, and multiply that number by 2.5, that would be your maximum loan amount. So then, you know, that's a simple equation, and you can decide whether it's worth it or not, depending on what that amount
Absolutely.
turns out to be.
All right, well, that was the last question that I've got, so I'll turn it back over to Jane.
All right. Thank you, everybody. Thank you to our presenters for doing such a great comprehensive job of covering this topic. And Megan, is there one more slide that shows the contact info for people, or
Yes.
is that one back?
There is. Here it is.
Okay. Yep. So Megan and Lindsay and Dan are all available to answer further questions or provide some level of assistance. So write those down and pass them on to your friends, because there isn't much time left to get those applications in.
Thank you, everybody.
Thank you, everybody.
Good job.
Thanks, everyone. And thank you to Rob Holcomb for answering a question out of the blue for me.
Yes. Okay, everybody have a good night.
Good night.